Welcome to Pro News Weekly. Let's dive into the latest updates on the financial markets. The US dollar is recovering. Stock indices are facing rotation. Gold is consolidating. And crypto whales are helping Bitcoin. The US economy is expanding, not only because of AI and the wealth-increasing rally in stock indices, but also thanks to increased life expectancy. Older people require care, and the surge in healthcare hiring contributed significantly to the 130,000 increase in employment in January. The chances of a Fed rate cut in April fell to 22% and to 58% in June, and the Euro-USD sank along with it. The reduction in the unemployment rate to 4.3%, the number of Americans working part-time, and the number of people unemployed for more than 6 months complete the picture of labor market stabilization. This is good news for the Federal Reserve, which cut rates 3 times in 2025 to avoid putting undue pressure on the economy. The pause in the cycle of monetary expansion is likely to drag on, playing on the dollar's side. Meanwhile, Donald Trump is calling for cuts in borrowing costs to save trillions of dollars in debt servicing. The White House continues to push its line, but if the Fed's independence is not threatened, euro-dollar bears will remain in control. U.S. stock indices went on a roller coaster ride after the release of January jobs data. They first hit new local highs, but then fell sharply. Good news for the economy was bad news for the S&P 500. Investors reacted to the lower chances of the Fed easing. However, it was just another consequence of the ongoing rotation from big techs to old economy stocks. Deutsche Bank notes that in the first 5 weeks of 2026, funds focused on stocks outside the technology sector attracted $62 billion, which is a record high and exceeds inflows for the whole of 2025. Investors are shifting from software manufacturers and financial services providers due to the developments in artificial intelligence by Anthropic and Altruist. At the same time, rotation is amplifying volatility in the stock market. According to Citigroup, significant deviations in companies' actual results from Wall Street forecasts lead to an average decline or increase in their shares of 5.2%. This is the highest figure since 2012. The gold market has shifted from an accelerated uptrend to consolidation. Gold's moves are increasingly dependent on macro data rather than momentum. Therefore, a strong U.S. employment report and the associated strengthening of the dollar and rise in U.S. Treasury bond yields have caused bulls on the precious metal to retreat. Nevertheless, major banks remain optimistic. Following Deutsche Bank, BNP Paribas has also predicted that gold will rise to $6,000 per ounce. Goldman Sachs continues to discuss the growing risks of exceeding its forecast of $5,400. In their opinion, the main bullish drivers of the gold rally remain intact. These include geopolitical turmoil, attacks on the independence of the Fed, and investors' flight from traditional assets such as bonds and currencies. At the same time, a prolonged pause in the Fed's monetary expansion cycle could become a serious headwind for gold. This is especially true if U.S. inflation does not slow down. The FOMC hawks believe that rate cuts are not necessary. Otherwise, high prices risk becoming entrenched in the U.S. economy. Has Bitcoin's decline ended? The collapse in prices from October's highs was driven by capital outflows from ETFs and a rapid increase in token supply. Since then, investors have withdrawn approximately $7.5 billion from U.S. specialized exchange-traded funds. However, companies continue to apply for registration of new institutions. Currently, 140 cryptocurrency-focused ETFs are being traded. Over a dozen newcomers debuted in 2026, and this trend is expected to speed up soon. According to Glassnode, crypto whales, owners of wallets with 1,000 bitcoins or more, have sold 170,000 coins, worth about $11 billion since mid-December. However, these added roughly 53,000 bitcoin, worth $5 billion in the past week. Large players are actively buying at current levels. Will this help Bitcoin find a bottom? For now, sentiment remains bearish, and the decline in open interest in Bitcoin futures indicates investor caution. They are in no hurry to catch falling knives. The key events on the economic calendar for the third week of February will be the publication of the minutes of the January FOMC meeting and statistics on U.S. GDP. European business activity, inflation, and UK retail sales. The Fed has paused the process of easing monetary policy, but instead of one FOMC member, two voted for a rate cut in January. Most likely, the minutes will include comments by Christopher Waller, providing a deeper understanding of the doves. After disappointing U.S. retail sales statistics, the Atlanta Fed's leading indicator lowered its U.S. GDP forecast for the fourth quarter to 3.7%. Trading Economics expects the economy to slow from 4.4% to 3.5%. According to Donald Trump, it could accelerate to 15% if Kevin Warsh is appointed as Fed chairman. At the same time, the president is calling on the central bank to actively cut rates. Business activity statistics will show whether the European economy will continue to remain resilient to White House tariffs. If British inflation begins to slow rapidly, as predicted by the Bank of England, the chances of a repo rate cut in March will increase sharply. This will put pressure on the pound, as will the inability of retail sales to meet forecasts. Follow the latest developments on global markets in Pro News Weekly. Like, share, and subscribe.